Right, where's my pen? We alive. We alive. We alive. We alive. What is going on, family? How we all doing? What did you guys make of that earnings beat though? Wow. Wow, 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 wow. We crushed it. We crushed it. It was an insane quarter. Insane quarter. The earnings call starts in about 7 minutes, guys. About 7 minutes. But yeah, let's just dive through the numbers because I saw this, right? I was drinking my juice and I almost spat my juice out. Like, that's insane. Insane. Okay, so full year revenue, we saw 83% year over year growth, $271 million. Now, you have to remember, right? When HIMS was a SPAC, their predictions, I think it was $220 or $215. Sorry, $215 million for the full year 2021. Crushed it. Absolutely crushed it. By the way, guys, can you hear me? Let me know in the chat whether you guys can hear me. Let me know. If you guys can hear me, just type yes in the chat so I know I'm not muted. Okay, let me know in the chat, guys, if you can hear me. Just type a yes in the chat if you can hear me, please. Yep. Okay, all good. Thank you, guys. Thank you. So, yeah, look at that, man. Look at that. Now, you have to remember, okay, the top of analyst estimates for this quarter was 77 million, right? But look at what we delivered. Q4 revenue increased from Q3 2021, okay, and grew 104% year over year. Wow. To 84.7 million. Absolutely destroying, okay, destroying analyst estimates. Now, I've got the price here, so we will pay attention to that or have it in the side whilst the earnings call is going on. Earnings call starts in about 5 minutes, okay? Or I believe the music will start in at least 5 minutes, but that gives us time to kind of, digest these insane numbers. Okay, so I'll have the stock price, even though, to be honest, it's really irrelevant. I'm sure, yes, we're up 11% in after hours, but by the time the market opens, you know how HIMS does, we're probably going to be in the red. We're probably going to open up in the red by the time it's market open, but who cares at this point? Really, who cares? It's all about business performance right about now, and Andrew and the team are knocking it out of the park. Okay, proofs in the numbers. Okay, proof is in the numbers. 104% year over year growth, $84.7 million dollars. Now, subscriber growth. Now, if you remember, we had 550,000 subscribers. That's also grown. Yeah, okay, 95% year over year. It sounds impressive, which it is. Don't get me wrong, but I mean, this time last year we didn't even have the app. So the app came out in Q3. So now we have the app. We've seen growth. So for me personally, I'm looking at it from a sequential point of view. And in Q3 2021, we had 550,000 subscribers. So this is huge growth once again. All right, this is huge growth once again. So beautiful. Okay, so let's look at the okay, so let's go through it now. So Q1 and full year guidance, okay, full year 2022 guidance. With full year 2022 revenue in the range of 365 million to 380 million, and adjusted EBITDA in the range of net loss 30 million to net loss 20 million. It's insane. I'm speechless, guys. I am speechless, okay? This is a huge beat and great revenue guidance, all right? So far, I can't fault anything I am seeing. Wow. Beautiful. You can see this, the stock price is down about 9%. Up 9%, should I say, sorry. We were up 11%, but again, like I said, it's irrelevant right now. I'm gonna pull up the Q3 performance. So this is a PDF chat, a PDF document that I have in my Discord. And I'm going to put it up so we can actually compare comps. All right, we can compare it right here. So let me download that for you guys. But again, insane numbers. If you've just joined, welcome. The earnings call, or the music, should I say, will begin in about 2 minutes. And then Andrew will pop in at about 9 p.m. Oh, 10 p.m. UK time is where the the party begins. But yeah, so far, really, really insane beats. Very strong guidance going into 2022. And this gives me all the confidence in the world. All right. So let me pull up the comps for you guys. 1 sec. Let's pull it up, right? So I would normally have this with my Discord, but we'll share it here just so that we know how impressive, how really impressive this growth was. Oh, that's loading. But yeah, okay. So we finished our first year as a public company with our best quarter yet. I mean, come on. This is insane. Okay. So once again, surpassing revenue and adjusted EBITDA expectations that we set entering the year while maintaining an efficient capital allocation philosophy. I swear, Andrew, just this is music to my ears, guys. You want a management team that are demonstrating efficient capital allocation. And this is what this guy is doing. And he knows all the buzzwords. But great, great, great. So we believe these results showcase that our mission to offer high quality, convenient, and affordable care through a more modern, personalized platform is being adapted today as more patients than ever across multiple age and demographic groups are engaging with HIMS and HERS in their health and wellness journey with multiple channels, said Andrew Dudum. Now, of course, remember our target market is our millennials, essentially. So the fact that we're seeing multiple age and demographic groups get involved is fantastic. But again, of course, with our TikTok growth, with our marketing, everything is geared towards millennials. All right. Okay. So the earnings call apparently should start in 30 seconds. But before that, I saw someone ask about subscriber growth. And yeah, these are the numbers, guys. Okay. So subscribers was 609,000. Okay. 609,000. That's how we're looking. Yeah, this is how we're looking, guys. Now let's see. Is it actually going to start in 15 seconds or 10 seconds? If it starts, we'll just crack on. If not, we'll pull up comps, right? We'll pull up comps. So about 4 seconds. Let's see where we're at. Let's see. Okay. Okay. Yeah, so it's just the music. Right. Okay, so it's loading. So it's just music for now, guys. It's the boring elevator music for now. So we'll keep an eye on that. Of course, so once we go live, let me pull that down. So, okay, so whilst the music is playing in the background, let me pull up the comps, okay? Pull up the comps. Okay, so where are we? All right. So, okay, so this were the highlights from Q3. Management stated acquisition of Apostrophe in Q2 is expected to generate approximately 4.5 or $4 to $5 million. And the high end of the estimate was met, generating 5 million in Q3. Okay, so they raised their guidance, right? So for Q4 in the earnings call, they raised their guidance to 76 million, or within the range of 76 million to 78 million. So management obviously beat that guidance because we delivered where are we? 84.7 million. So again, we're starting to see management in terms of how they like to set expectations. So this is a management team that lowballs a lot. Okay, so they lowballed expectations between 76 million to 78 million and absolutely smashed it, delivering 84.7 million, right? So let's have a look. So they did say gross margins are expected to decline by approximately 2 points in Q4. Okay, let's take a look at the numbers. Where are the gross margins? Let's have a look at the financials. I'm gonna quickly scroll down in the meantime. Let's take a look at the income statement. Okay, so here we are. Right. So, okay. So cost of revenue, we saw a huge jump there. All right, we did see a huge jump in the cost of revenue, and that's of course they made us aware. If you've noticed, they've been rolling out wholesale. Okay, wholesale has been the target for HIMS this quarter, and yeah, that's going to obviously incur further costs. Marketing. Okay, so marketing jumped quite significantly quarter from year over year. So 19 million to now 42 million in terms of marketing. Now, if we go back to my tracker in Q3, we spent 38 million in marketing. Okay, so in Q3 we spent 38.2 million in marketing, and this time we spent 42 million. So not a huge jump sequentially from a marketing spend, which is good, But yet we saw a huge jump in revenue, right? And also subscriber growth. So that's very, very good. Okay, showing a good network effects, and it's growing organic growth, good organic growth. Okay, so loss from operations that did quite a big loss from a year-over-year point of view. Again, I'm sure stock-based compensation is, yes, here we go. So stock-based compensation played about 11.9 million in total stock-based compensation. So SBC. Right. And then net losses increased. Where are we in terms of net losses? Yes. Okay. So net losses, total other income, 9.6. Not bad. Not bad. I was expecting a deeper loss because I was expecting them to increase marketing, but marketing didn't increase that much. 42.7 million. Last quarter was 38.2 million. Okay. And if you look again, subscriber growth. So we had 551,000 subscribers in Q3, and our subscriber growth now is sitting beautifully at 609,000. 609,000. So in terms of my investment thesis, we're on track. Okay, let's have a look here. So it's still music right now. Yeah, okay, still music right now. So yeah, my bull thesis or my investment thesis, it's firmly on track. They beat my expectations. If you take a look at net orders, that also, yeah, everything is up pretty much from a year-over-year point of view, strongly up. Now, online revenue. Okay, so online revenue was 78 million. Okay, online revenue was 78 million. However, if we look at the previous quarter, so Q3, online revenue was 72 million. Okay, so it only increased by 6 million in terms of online revenue. Right. Okay, I guess decent growth sequentially. Decent growth. Okay, 6 million added sequentially, not bad. I mean, from year-over-year perspective, absolutely crushed it. Okay, so we generated 72 million online revenue this quarter, 78 million, not bad. However, I think the biggest growth came in wholesale revenue. Look at this, right? Wholesale revenue was 1.3 million this time last year, and now we're at 6.3 million. Now, this is a huge number because if you look at it, wholesale revenue was 2.1 million, right, in Q3. Okay, so it's 2.1 million wholesale revenue in Q3, and we're now at 6.3 million. Huge. That is sick. Massive growth. And again, that's all thanks to now, of course, the company. We're now in Walgreens, we're in Target, we're in Vitamin Shop, we're on Amazon. Obviously, we've got Uber now. We're partnered with Uber. So that shows that what the company are doing in terms of growing wholesale revenue, it's working. It's working. Okay. So not bad. I mean, sequential growth from a wholesale revenue point of view, insane. I'm blown away by this. Absolutely blown away by the wholesale revenue growth sequentially. Fantastic. I think online revenue was strong as well. We're up 6 million sequentially. I mean, you can't argue with that. Come on, guys. I mean, we're in a market right now where people are guiding lower and they're not beating last year's revenue. They've got harder comps, but we are absolutely destroying last year's comps. Very, very impressive. Okay, so very happy with the earnings there. Net orders, so we're at 968 last quarter. Where are we now in terms of net? Yeah, crushed it again. Sequential. Remember, guys, this is sequential growth. So this is really, really impressive. Really impressive. Really, really impressive. So overall, very, very happy with performance at the moment. I'm really looking forward to the earnings call to find out what kind of gems we can get. Let's look at our balance sheet for a second. Let's take some time to look at the balance sheet. So the stock is up 13%. Okay, so David is asking what was expected, right, David? So let's go to analyst expectations. Let me quickly pull that up. So if you look at analyst expectations, okay, so the top level, top range, or the highest estimate for analysts was 77 million, right? So 77.7, or Ermin says in the chat 78 was the highest. So that's shows it was a huge beat. Okay. Analysts weren't expecting this. Let me close this down. So huge beat. And we did, someone said almost 85 million. Yeah, we did 84 is to be exact. But yeah, 84.7 million. So a huge beat. And this expectations versus what we produced. Fire. Yeah. Yeah. I see fire in the chat. Yeah. Rightly so. Fire in the chat. Let's see how we are. All right. So it's still music right now. So let's just carry on reviewing. Right. So lovely jubbly. I like that. David says, yep. Lovely jubbly. Thesis is still intact. Now let's look at our balance sheet. Okay. So current assets increased, of course, year over year. Where are we in terms of short-term investments? Okay. So our cash, 71 million cash. Total current assets. Look at that. We more than 100%. We grew our total current assets by more than 100% year over year. Fantastic. Again, if you guys notice, can you see any debt on the balance sheet? I can't see any like short-term or long-term debt. Liabilities are total current liabilities are 79 million. So total current assets 269 million. So again, within the next 12 months, there's the chances of this company going bankrupt, from this current balance sheet perspective is next to zero, which is very, very good. We love to see that. But yeah, so the balance sheet remains very strong, in my opinion. Now, okay, total assets is 420 million, but goodwill, okay, so goodwill takes 110 million. So I like to deduct goodwill from total assets because again, it's an intangible asset. Well, yeah, measurable, should I say, is a bit difficult. But yeah, anyways, even if you deduct goodwill from total assets, we're still crushing our total liabilities, which is fantastic. Absolutely fantastic. So this is very, very good. We've got a strong balance sheets. Can we see our cash flow? Where are we at with cash flow? So I'm guessing, yeah, we're still negative cash flows at the moment. Let's have a look at SBC. Stock-based, yeah. So stock-based compensation, that did fly up. I cannot lie, that did fly up. Inventory is positive, which is good. We love to see that. Where are we? So net cash used from operations, that was up. Yeah. And again, a lot of that, as you can see, you can say, yeah, is equated to SBC essentially. But yeah, I mean, overall, crushing it. Okay, overall crushing it. And for me, I don't know about you guys, but for me, my investment thesis has just been strengthened, and I feel extremely confident to add to my position. Right. So let's bring up the stock there. So we're up 13% whilst we're waiting for the earnings call to begin. But yeah, let me know in the chat what you guys thought. What did you think of earnings? I thought it was a strong quarter and a very strong year. Okay. You can't ask for anything more. 104% year over year growth. Right. Where are we? Let's see. Can we hear? No. Still just music at the moment, guys. Still just music at the moment. So yeah, this is where we're sat. Okay. Let me see what you guys are saying in the chat. What was your initial reaction? I think for me, my bull thesis is absolutely still intact. And it just, again, this is probably one of the most undervalued SPACs, should I say? Because we all know, look, SPACs have been discriminately hit since February 2021. It's been a downward spiral, but in the midst of the crap, should I say, there are gems, and I think HIMS, they're proving to be one of those gems, right? Prims are HIMS are proving to be one of those gems, and Andrew and the team are executing very, very well. All right, so okay, so someone's asking for a breakdown in. Let me show that. So a breakdown. Okay, yeah. So here we are. Simply, here we are, brother. Let me pull it up for you on time. So yeah, this is the breakdown. Oh, have I gone past it? 1 second. Sorry. Where are we? Where are we? Breakdown, breakdown, breakdown. I think I went past it. My apologies. But here's where we are. That's the breakdown. Okay. So wholesale revenues where we saw the strongest growth, in my opinion. Wholesale revenue, because it was 2 million in the last quarter, and we've grown it by 4 million. But again, we've been very strong, very aggressive with our wholesale strategy. We're in a lot more retailers. We're in 20,000 locations, 20,000 locations, and yeah, we're seeing the fruits now. So huge, huge growth there. All right. Okay. Okay. All right. Let's have a look at the. Have they started the call? No, it's still just music at the moment, guys. All right. Right. Okay. It's still just music at the moment, guys. So we're just going to continue looking at some of the commentary. So yeah, we've been through that. So Andrew goes on to say that I would like to thank the tireless effort made by the amazing Hims and Hers team. Guys, check out their TikTok. They are absolutely crushing TikTok right now. So without them, the astonishing progress that we made this year, paving the way for long-term sustainable success, would not have been possible. Yeah, bravo, bravo, right? Bravo, great growth, and yeah, phenomenal. Thesis is still intact. Of course, I'm going to look into the numbers a bit more closely. I want to look at stock-based compensation, how much we did, but still the music. But yeah, for now, first initial reactions, thesis is still very, very strong. Okay, it's still just music right now. But yeah, okay. So let's see what you guys are saying in the chat while the music is still playing. Okay, so okay, so Rin, hold on, let me see. It's still just music at the moment. I'm gonna lower it down just a little bit. Yeah. Okay. So the question about competition looks nearly exactly like them. So I think the closest competitor to yeah, the closest competitor to HIMS at the moment on the market is 23andMe, right? And they made an acquisition of a company called Lemonade, which was a competitor to HIMS. Oh, here we go. Oh, we're starting. We're starting.
All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, again, press the star 1. Thank you. Jay Spitzer, Senior Vice President, Investor Relations, you may begin your conference. Good afternoon, ladies and gentlemen. Welcome to the HIMS and Hers Health fourth quarter and fiscal year 2021 earnings call. On the call with me today is Andrew Dudum, co-founder and our Chief Executive Officer, as well as Benny Okube, our Chief Financial Officer. Before I hand you over to Andrew, I will, as usual, take you through the legal, safe harbor, and cautionary declarations. Certain statements and projections of future results made in this presentation constitute as forward-looking statements that are based on our current market, competitive, and regulatory expectations, subject to risks, uncertainties that could cause actual results to vary materially. We undertake no obligation to update publicly any forward-looking statement after this call, whether as a result of new information, future events, changes in assumptions, or otherwise. Please see our most recently filed 10-K and 10-Q for discussions of risk factors as it relates to forward-looking statements. In today's presentation, we use certain non-GAAP financial measures. We refer you to the reconciliation table contained in today's press release available on our investor relations website for reconciliations to the most directly comparable GAAP financial measures and related information. You'll find a link to the webcast on our investor relations website at investors.hims.com. After the call, this webcast will be archived on the website for 12 months. And with that, I'll now turn the call over to Andrew. Thank you, Jay. HIMS achieved so many milestones in 2021 for which I'm proud. By year end, we had over 600,000 subscriptions. We grew revenue 83%. We extended our market leadership, invested in building out our management team, and grew our omni-channel presence to over 20,000 retail locations. This past quarter was no different, with accelerations and strong execution across our core and emerging categories. Revenue accelerated to $84.7 million in the fourth quarter, a 104% increase year over year. Subscriptions grew from 312,000 to 609,000, a 95% increase from year-end 2020. As a result of healthy retention, new customer cohorts acquired since 2020 now reach a cumulative gross profit in excess of their paid marketing expense within just 2 quarters. In terms of brand awareness and traffic, our digital properties grew to over 11 million visits in the fourth quarter, a 90% increase year over year, while decreasing customer acquisition costs per new sub 13% over the same time period. We meaningfully expanded our omnipresent strategy through existing and new long-term partnerships with some of the largest retailers in the United States, including Target, Walgreens, CVS, Bed Bath & Beyond, Vitamin Shoppe, and more. And in combination, our core and emerging categories are contributing to an acceleration in revenue diversification, giving us confidence in our ability to deliver robust growth for many years to come. We invested heavily in strategic infrastructure this year. This infrastructure both supports the accelerated growth in our core categories, but also lays the foundation for improved customer experiences in our emerging businesses. Improved customer experience is key to our company's ongoing success in creating a loyal customer base. For that reason, we continue to invest in infrastructure verticalization across every aspect of our business. Whether the ultimate benefit be speed, price, quality, or selection, we believe these strategic investments will ultimately accelerate our ability to delight customers, drive increased profit, and ultimately stronger returns on invested capital. Our distribution and pharmacy fulfillment centers expanded significantly, with our compounding pharmacies in Arizona expanding from 1,700 square feet to nearly 25,000 square feet. In addition, our Ohio pharmacy facility now is fully utilizing over 300,000 square feet. Clinical capabilities expanded dramatically, with expansion of our EMR's breadth of services to include broadened specialties in dermatology, psychiatry, therapy, and general medicine, powering over 2.4 million visits versus 1.6 million the previous year, and with nearly 25,000 clinical quality reviews compared to 12,000 in 2020. Our iOS mobile platform was launched successfully nationwide. Our initial test sees 60% of the members downloading the app in their first week of beginning a treatment on our platform, unlocking a whole new level of patient engagement. And lastly, our dedicated team grew to nearly 400 full-time employees versus 181 at the end of last year, strengthened by our expanded management team, including our new CFO and Chief Growth Officer. While so much has happened this past year, the reality is that we are in the earliest chapters of our company's life. Today, a small fraction of healthcare is delivered online. But what was true for e-commerce in the 90s is true today for digital health. The wave is just beginning and only growing. Platforms like HIMS and HERS are at the forefront of making people's lives easier, giving them access to treatment and services, doctors and specialists that many people are not otherwise able to obtain, at transparent prices and at a level of care and respect often not found in the traditional health system. We believe HIMS and HERS has the potential to be synonymous with this next generation of healthcare. We are accelerating the discovery and personalization of treatment options and ultimately empowering people with choice, information, and better outcomes. Consumers are eager to interact with healthcare in these new ways. They want to do so with brands that they recognize and trust. The world is changing and our market is moving fast. We are near the front of this race and well positioned, but recognize we're in the early laps. We believe our ability to resonate with young customers, establish relationships with many of the nation's top retailers, build trust and brand loyalty, and drive selection and breadth of services will allow us to solidify and extend this leadership position. Given the scale of this opportunity, we are rigorously focused on creating shareholder value over the long term. At the core of this strategy is an internal focus on our simple yet powerful flywheel. This equation is our North Star. We believe in the power of its compounding benefits and are rigorous in our daily tracking of metrics and analytics such as engagement, stickiness, acquisition costs, and retention to ensure.
All right, guys. I'm hearing you guys saying that the sound quality is really, really poor. As you can hear, I mean, it's absolutely fine from my end. Unfortunately, it's the sound quality from their end. It sounds really, gargled or something like that. So what I'll do, I'll carry on listening to the earnings call, and I will do an earnings review. I think that will probably be better because, I think a lot of people are complaining about the sound quality. Fortunately, that's nothing that I can do. So I'll listen to the earnings call. I'll do an earnings review, and then I'll drop that video. All right, guys. So we're going to end it here because there's just no point with the poor quality. And we'll chat to you guys in a bit then. All right.